Hello and welcome to Star USA Training. Today is Tuesday, April 9th, and we're talking about electronic export information, also known as EEI filing. This webinar is being recorded. The slides, materials, and the recording will be posted to our website. Everyone who registered will get an email when that posting goes up. So it can take a few days for that to happen, but you will get the email if you registered for the webinar. If you're attending, you'll see it. And there is one NCBFAA credit for this webinar. The code will be provided at the end of the session. All participants are currently muted. The Q&A feature is available if you have questions, and I please strongly encourage you to post your questions in there, and I will answer them at the end. Before we jump in, a quick introduction. My name is Michael Easton. I am the President and General Manager of Star USA. I'm a licensed customs broker, and I've been in the business now for officially 20 years as of like 3 days ago. So this is a milestone year for me. Star USA is a consulting, advice, training, and services firm based out of Northeast Ohio. We provide in and outsourced trade operations, regulatory support, policy and procedure writing, audits, disclosures, that sort of thing, as well as help with all manner of regulatory trade compliance matters. So if you need some assistance there, feel free to reach out. We'd be happy to help you. I do have a full slide deck today, so hopefully I won't speak too fast. I will be using initialisms. Various federal agencies and the government loves to use their initialisms, so bear with me. If you need me to slow down or clarify anything, please use the question and answer or chat feature in the software, and I will circle back. But I'm apologizing in advance. So when we talk about EEIs, I think it's important whenever we have these discussions to lay the groundwork through the regulatory lens. That's my specialty. That's where I understand and can distill the government's perspective on these things. So we're going to take a look at the federal agencies as well as the scopes and penalties for EEI filing in particular. Whenever we talk about exports, I like to convey that two key facts. Exporting is a privilege, not a right. It is not something guaranteed by any document in the U.S. Constitution or Bill of Rights. It is, as it's a privilege, it comes with responsibilities, and there are penalties for noncompliance. Additionally, those privileges can be revoked, and there are circumstances of various agencies revoking export privileges published by the BIS. They just released an updated version in March of this year, so actually like 2 weeks ago, giving us more stories of companies that have been hit with penalties or had their privileges revoked. So it's important to realize that exporting is not a guaranteed thing. You have to comply with the rules and regulations. And secondly, you have to be able to demonstrate your compliance. There's always a presumption of noncompliance, and the way that you combat that presumption is by having documentation to support your compliance efforts. Part of compliance is knowing what your role is and performing that role. And when I say your role, I mean in the context of the regulations. There are absolutely roles that you need to pay attention to as part of a sales transaction, whether you're the buyer or the seller, things like that. But from a regulatory perspective, make sure that you're adhering to the regulations and covering the bases for your role. Have a comprehensive compliance program in place, and keep and maintain your records for at least 5 years. The general rule of thumb for international trade compliance, import or export, is 5 years from the date of the most recent event. So 5 years from the date of export is a common rule of thumb for keeping your records, at least 5 years. When we're talking about EEIs, we are in the zone of the U.S. Department of Commerce, Bureau of Census, specifically Title 15, Commerce and Foreign Trade. That's our export compliance area where we need to follow all the EEI rules. There are other rules and regulations and other agencies involved with exports, and this slide is really just to help you capture some of that other perspective. When we talk about export controls in contrast to export compliance, export controls, which are more restrictive, we're talking about different agencies. We're talking about the BIS, the DDTC, and OFAC, and regulations such as the Export Administration Regulations or the ITAR regulations, things of that nature. But for EEI purposes, we are strictly focusing on Bureau of Census, export compliance, foreign trade regulations. And in particular, the regulatory citation for that is 15 CFR Section 30. This is your FTR. These are some of the key references that most of today's information is being pulled from. This, in combination with my experience in the field, helps to kind of paint the picture of what your regulatory responsibilities are and how you comply with those. So I'll have citations scattered throughout the slides today. These are really just to give you a frame of reference and to know where to start looking. If you want to go find the information for yourself, as always, you can send us an email or ask us a question. We'd be happy to answer it. But it's important to note that we're centered on these foreign trade regulations in 15 CFR 30. So under the foreign trade regulations, we have to define what we're talking about when we say export. The word export is defined differently under other regulations. Under the FTR, however, we're talking about the sending or transporting of goods out of the country. Goods are defined as merchandise, supplies, raw materials, products, or any other item that's identified by an HS code, a Harmonized Tariff System code. So if it is a physical item, it is likely covered under the foreign trade regulations, the FTR. Certain things that are not covered under the foreign trade regulations are things like software that is not mass market software or other media. So things that are like downloadable, those are not covered. Those would not be considered to be goods. Certain services are not considered goods under the FTR, and certain forms of information are not part of the foreign trade regulations. Those things are absolutely covered under the EAR, ITAR, OFAC, and other regulatory concerns. But in the context of the foreign trade regulations, we're only focusing on goods. Then when we talk about goods, or if you need clarification or help, you can always email us at train@starusa.org for assistance. So we're looking at the foreign trade regulations. The key vector for maintaining compliance is navigating the electronic export information filing. This is information that is collected by census to determine international trade policy, trade activity, and statistics for determining, export import deficits or surpluses, things of that nature. It helps really shape our economy in many different ways. And under the foreign trade regulations, it states that the electronic export information, the EEI, shall be filed through the AES by the US PPI or authorized agent for all exports of physical goods. We'll get into defining each of those terms, but I want to illustrate kind of how it's presented to the general audience in the regulations. The EEI is the electronic record of the export transmitted to the Bureau of Census for statistical reporting and export control purposes. So in addition to the statistical information gathered by the EEI, this also helps tie in with export control concerns under the EAR, under ITAR, or any other regulatory agency that controls exports. That information that's provided on the EEI does feed into those agencies. So it is really just kind of the first step when considering your exports, whether or not you're covered under strictly the Bureau of Census foreign trade regulations, or if you have adjacent governance for controlled technologies like dual use goods or military goods. We won't get into those in the scope of this, but I wanted to highlight that there is a tie-in there. The automated export system, the AES, this is the electronic system where the EEI is filed. It's filed either by or on behalf of the party exporting the goods, whether it's from the US, Puerto Rico, or the US Virgin Islands. The automated export system is accessed through the automated commercial environment. So the AES is in ACE, and that's where you file the EEI. I know it is confusing. It is alphabet soup, but that is the world that we live in. So for today, you'll often hear the terms EEI and AES used interchangeably. They're not the same thing, although it's a distinction without really any importance. For what I'm talking about today, I'm going to use EEI most often to mean specifically the filing information, and then I'm going to use AES to mean the system. I'm going to make every attempt not to confuse myself or you all in the process. Okay, so who is the US PPI? We just said that the EEI has to be filed in the AES by the US PPI. Well, the US PPI is defined in the regulations, and they have regulatory responsibilities under the foreign trade regulations. The USPPI stands for United States Principal Party and Interest. The PPI portion of that, Principal Party and Interest, is a term that surfaced in the evolution of our export compliance rules and the evolution of the foreign trade regulations in the early 2000s when we moved away from exporter of record. That used to be written into the regulations, the words exporter of record. That is no longer a role in the regulations. The exporter of record concept has been deprecated. It's no longer in use from a regulatory perspective, and it has been replaced by United States Principal Party and Interest, USPPI. If it helps you understand it better, just think of it as the exporter of record, but it is specifically defined as the person or legal entity in the United States that receives the primary benefit, monetary or otherwise, from the export transaction. I do not want you to confuse this definition with being paid money by somebody that is then going to export the goods themselves. One of the key pieces of this is that primary benefit is coming from the export transaction. If it is a domestic sale and you don't have a direct role in the actual export transaction, you may not be the US PPI. Knowing whether or not your involvement in the transaction rises to the level of PPI is an important element for you to recognize for your business. It's going to be unique in each transaction, each scenario, whether or not you meet this definition, but it's important to recognize whether or not you meet this definition. Because if you do not, then the EEI requirements, the foreign trade regulations, may not apply to you at all. You will still have some obligations under the export control regulations, which we're not talking about today, but under the foreign trade regulations, the US PPI has an important regulatory role. And if you're not the US PPI, then you may not have that same role. So who can be the US PPI? We're talking about typically either the US manufacturer selling goods directly to a foreign party, the US seller, a US buyer that's purchasing goods from a US manufacturer for the export sale to an FPPI. So there's a couple of different ways where a company can be a PPI, and it may not be always the manufacturer, it may not always be the seller in the US. It depends on how the transaction is set up. You can also have other parties like the US order party, which is very, very uncommon, but it does exist in the regulations. So the definition is here on the page, but it's important to recognize really who's playing which role. There are some very rare circumstances where a customs broker may be listed as the US PPI, particularly if they were the importer of record on an entry of goods that were subsequently exported, particularly without any modification. But it's very, very uncommon to have a customs broker be the US PPI. Most commonly, your US PPI is going to be the US seller who is selling the goods abroad. The other regulatory role is, or another, not the other, is the FPPI, the foreign principal party in interest. This is the party abroad who purchases the goods for export or to whom final delivery or end use will be made. This party may be the ultimate consignee, and we'll talk about ultimate consignee again in a little bit, but the FPPI is the party who's buying the goods. They are the purchaser, they are the sold to party. They have a couple of other names, and they may or may not be the same as the people that are receiving the goods. It is not at all uncommon to have one entity purchase goods and have them shipped to another entity, usually for further manufacturing before they take possession of whatever that assembled or manufactured good is. So there's a lot of different ways to consider the FPPI, but you really want to be looking for who's purchasing the goods. Unlike the US PPI or the authorized agent or the ultimate consignee, the FPPI is not a named party on the EEI filing. There is no box for FPPI. We'll take a look at that later on. But generally speaking, the FPPI is going to be your buyer. And I'm sure that will bring up several questions, which I hope to clarify as we go through. And if not, I will definitely circle back to as we get near the end. The third and final role that is explicitly defined in the regulations are the authorized agents. The authorized agents, they are authorized by somebody. And who is that person? It is one of the PPI. There are two PPI, US and foreign. So one of them will authorize the agent. In a non-routed transaction, the USPPI authorizes the agent. In a routed transaction, the FPPI, the foreign principal party, authorizes the agent. And this agent is being authorized to file the EEI. That's their purpose in the context of the regulations. The way regulations map to reality can often be a little nonlinear, but in the context, and this is why it's important to kind of have this baseline, in the context of the foreign trade regulations, which are the rules that you must adhere to, the agent is authorized by the USPPI in non-routed and by the FPPI in routed transactions, and they are authorized to file the EEI. They have no other explicit purpose outside of that responsibility within the regulations. Whether or not they have any other contractual obligations or are performing another role adjacent to the transaction as a customs broker, as a freight forwarder, any of those factors is not considered within the definition of authorized agent. Authorized agents are responsible for getting a power of attorney, written authorization from a PPI to file the EEI on their behalf. The written authorizations, if it's not a power of attorney, the written authorization should then specify the responsibilities with particularity. Words to the effect of, you are hereby authorized to file the EEI for this range of shipments or for shipments to this party, yada, yada. In a routed transaction, the USPPI would not provide the agent with a power of attorney or written authorization. In a routed transaction, that's the responsibility of the foreign principal party in interest, not the USPPI. The authorized agent, the filer, is responsible for the truth, accuracy, and completeness of the EEI, except insofar as that party can demonstrate that it reasonably relied on information furnished by the other responsible parties participating in the transaction. So there's a little bit of a CYA in here for the filers. If they are provided incorrect or inaccurate information or false information or incomplete information by one of the PPI, and that information is what gets filed, the agent may not be held responsible for that. They're only going to be able to file information that's as good as what they've been given. I won't spend too much more time on those three roles that are defined in the regulations, but we'll see them in practice as we go through. There are additional roles that get reported on the EEI that don't have specific responsibilities within the context of the foreign trade regulations. These roles are defined and they are, in fact, entered into the EEI filing when that filing is made. The ultimate consignee, which is the party who receives the cargo, is going to be reported on the EEI. The intermediate consignee is the party who may be handling or temporarily staging the goods or playing a role in the redistribution of the goods, would be the intermediate consignee. And then the freight forwarder involved in the actual movement of the goods could also be reported in the transaction. So these are the three additional roles that do get reported in the EEI, but don't have responsibilities under the foreign trade regulations. And it's also important to understand when an EEI is required. We use what's called the one rule that states an EEI filing is required when all goods are being sent from one USPPI to one consignee in one country of destination on one conveyance on the same day. That is when you file the EEI. If you have two USPPIs, if you have two countries of destination, those require separate EEI filings for each one. You would break down the transaction so that you have one in each of these variables and no more than one. If you have multiple, if the shipment broken up into two loads, one goes out on Wednesday, the next one goes out on Saturday, that's two EEI filings. I just want to be clear on that. And it's also important to know when the EEI needs to get filed. For trucks, it's 1 hour prior to arrival. For rail, it's 2 hours prior to arrival at the border. I want to specify there. For truck and rail, it's 1 hour prior to arrival at the border before it crosses. For vessels, it is 24 hours prior to lading aboard the vessel. This is one that people get wrong quite often. It's not 24 hours prior to vessel departure. It's 24 hours prior to the vessels being laden on board the vessel. So that's earlier than many people realize intuitively. And for air, it's 2 hours prior to departure from the airport. Doesn't matter when it crosses the border, it doesn't matter any of that stuff, but it's 2 hours prior to departure from the airport. And EEI is required for all modes of transport. This is in contrast to things like the HMF fee, which only applies to vessel shipments, or the ISF filing, which is only for a vessel cargo arriving at a U.S. port. There are basically, for all modes of transport, EEI is required, and the date of export or the time of export is relevant to the filing. If you are shipping through Canada or Mexico to a port in Canada or Mexico so that it can be then exported to Europe or Asia or some place in South America, things like that, the date of export is going to be the date it crosses the border out of the United States. It is not the date that it arrives at the destination. It's not the date that it gets aboard the vessel in one of the other country's ports before it gets further exported. It's the date it leaves the US. So paying attention to those factors will keep you out of trouble. Some of the common exemptions and exceptions, and there were a couple of questions about this in the registrations for the webinar, so hopefully this will at least highlight some of the times when you would not file the EEI. The most common is the commodities valued under $2,500 per Schedule B. If the total value per Schedule B number is under $2,500 on that one shipment, then an EEI is not required. You may not manipulate your shipment so that you fall below this threshold so that you can avoid filing EEIs when you would otherwise be required. There's anti-manipulation rules baked into that $2,500 number, but effectively, if your threshold is less than $2,500 per Schedule B, and a Schedule B is a harmonized tariff schedule number, just Schedule B instead of Schedule A, that identifies your good, your grouping of goods falls under that number, then you do not have to file an EEI, and you would write on your paperwork, no EEI 30.3A. Or is it 30.7? 30.37 is Canada, I think. Anyways, you would write the code on there so that the carrier knows that no EEI is required or will be found for that shipment. Another common exemption is that the goods are going to Canada. If the goods are going to Canada, EEI is not required. The U.S. has a data sharing agreement with the CBSA that allows us to gather the same data for Canadian exports as we would get as though we were the ones filing the data ourselves. So we can pull the data from CBSA directly, and we don't need to have U.S. parties filing the EEI for Canada shipments. And also, there are most significant by volume trading partner. Trucks cross that border hundreds of times a day, and therefore no EEI is required for Canada. But EEI is still required for Mexico, even though we have just as many shipments, give or take, crossing that border. We also do not need to file EEI for tools of trade in their containers if it is a rack or certain factors that are used to just transport the goods down to or transport the goods to wherever they're going. Then those racks, those devices, those tools of trade are coming back into the U.S. We usually do not file the EEI. If they're going to be staying permanently in that foreign country, then they would be usually considered eligible for filing under EEI. And then any shipments that are going from a point in Canada or Mexico to another point in that same country and just happen to transit through the U.S., then EEI is not required. However, not exempt, these are the exemptions from the exemptions or the exceptions to the exemptions, however you want to phrase it. In every circumstance, a licensable shipment, if it's licensed by an agency like the BIS or under the Export Administration Regulations, if it's licensed by the DDTC under ITAR, if it's a DEA or Nuclear Regulatory Commission, if there is a license for this shipment, you must file the EEI, regardless of value, regardless of whether it's going to Canada, regardless of any other factor. EEI is required for any licensable shipment. Additionally, if it's subject to ITAR, but it's exempt from license requirements, so if we have an ITAR license exception or license exemption, then EEI is still required for that good. You must file the EEI for that ITAR good. Not true for the EAR ones. If there is a license exemption for EAR good, you may not need to file the EEI. You also need to file EEI for any rough diamonds and self-propelled vehicles. And there was a question about vehicles in the registrations that I wanted to call attention to. You must declare to the port of export, usually, I think it's 72 hours prior to departure, if you are going to be exporting a vehicle. And you must get prior authorization from CBP before that good is allowed to be laden aboard the vessel, before it's allowed to begin its journey for export. You have to prepare that information and submit it not as an EEI, or not just as an EEI at least, to CBP directly so that they can screen the VIN number or any other factors about the shipment before it's allowed to leave the country. So any self-propelled vehicle, and you can look up definitions for those sorts of things if that's your industry, will need to be announced prior to 72 hours prior to departure from the shipping location if they're going to be exported. And this is not part of the EEI. This is separate from the EEI itself. Okay, hopefully we all kind of get the gist of the requirements there. Penalties for non-compliance, we're looking at $10,000 per violation plus forfeiture penalties for any failure to file or filing of false or misleading information. Late filings are subject to $1,100 per day, not to exceed the $10,000 cap for a failure to file. Those are for your civil penalties. For criminal penalties, we're looking at starting at $10,000 plus up to 5 years in prison or both per violation, plus forfeiture. And then that's for failure to file. For furtherance of illegal activity, effectively the same penalties apply, but there are other laws that may be subject to scrutiny if, possible violations of other laws, not just the foreign trade regulation violations. A lot of times these will be coupled with violations of the EAR or with ITAR or with the OFAC. Forfeiture penalties include forfeiting your interest in the goods or penalties in the amount of your interest in the goods. If you do suspect a violation has occurred, you can use something called a voluntary self-disclosure, a VSD, to announce or to basically self-report that you have made a violation. VSDs are considered a mitigating factor in any penalty proceedings, unlike on the import side, where prior disclosures are basically prevent the imposition of penalties. The voluntary self-disclosures on the export side are only considered a mitigating factor. It's still a significant way to mitigate your penalty exposure, but it's unlikely to prevent you from receiving penalties entirely. U.S. is very, very protective of export controls. If it is a clerical error, I believe internal guidance at the Bureau of Census indicates that the first violation should not exceed $200, and the second violation would not exceed $500, and then it kind of scales up from there. But clerical violations are different from either systemic negligence or other factors, or if there is a licensable or control category to the shipment. But if you need help with voluntary self-disclosures, highly recommend you talk to an expert before you do anything. And if you're interested in reading up on the factors for VSDs, there are some regulatory citations for different agencies down below on this slide. So key takeaways from that section, there are 3 primary roles under the regulations. They are the USPPI, the FPPI, and the authorized agent. All 3 of those have explicit roles and responsibilities in the regulations. Other parties are recorded as part of the EEI, but they don't have roles and responsibilities under the regs. And the EEI is required when there's more than $2,500 per Schedule B, the goods are leaving the country by any mode, the one rule is met, and no exemptions apply. That would allow you to not file the EEI. Okay, so now we're going to look at some of the filing methods here, talking about some of the distinctions between routed and non-routed transactions. I do a webinar on routed and non-routed transactions that is somewhat similar to what we're talking about today, but I won't go into as much detail. If you are having trouble understanding the difference between routed and non-routed transactions, I would recommend taking a look at that webinar. It is on our YouTube and our website. There are materials, all that stuff. And then we'll look at self-filing versus agent filing and those different methods. So routed transactions are defined in the Foreign Trade Regulations under 30.3E as a transaction in which the FPPI has authorized a U.S. agent to facilitate the export of items and to prepare and file the EEI. There is an explicit definition. The FPPI has responsibilities for the EEI, and the FPPI is the one that must authorize the agent. Filers must be physically located in the U.S. at the time of filing. You may not be located abroad. So if your buyer overseas is working with a forwarder that's based out of their home country and they're routing the shipment, and that forwarder that they're working with does not have a party in the US to affect the filing, there could be a problem because you must be physically located in the US at the time of filing when you make that EEI filing. So that might be a vector to clarify with your overseas buyers if there are routed transactions and you're working with a foreign-based freight forwarder that does not have a US presence. Non-routed transactions, which are in direct contrast to routed transactions, they are not explicitly defined and are therefore any transaction in which the definition of a routed transaction is not met. So if we have a transaction in which the FPPI has not authorized the agent to file the EEI, then we don't have a routed transaction. Therefore, we have a non-routed transaction. This is also referred to as a standard transaction, just a normal transaction. I'm going to call it non-routed in my lingo here, just to keep the contrast clear. But in a non-routed transaction, the responsibility for filing falls to the USPPI. And the USPPI may elect to self-file or they can use an agent. And that's kind of how that works. So just to remind you again, the EEI shall be filed through the AES by the USPPI or the agent. And the AES is the system where that information is filed. So for a routed transaction, this is the transaction in which the FPPI, the foreign principal party, has authorized a U.S. agent to facilitate the export and to prepare and file the EEI. The USPPI's responsibilities are to provide the agent with the 12 routed data elements identified in 30.3E 1 through 12. There are 12 specific data elements that the USPPI must provide to the FPPI or their agent so that the EEI can be filed correctly. The USPPI is also responsible for record-keeping responsibilities, whatever that entails, any records relating to that shipment that are covered under those requirements. Continuing routed transaction here, and the FPPI is therefore responsible for authorizing the agent, and the authorized agent is responsible for receiving and retaining the authorization from the FPPI. They are responsible for filing the EEI, and they are responsible for providing evidence of filing to the USPPI. They are not required to do so without being requested to provide it, but if the USPPI requests evidence of filing, the authorized agent is obligated under the regulations to provide evidence of that filing, at least insofar as verifying the 12 data elements that the USPPI provided for that filing. The authorized agent is also responsible for record keeping. So one note there, the USPPI is allowed to act as an authorized agent in a routed transaction. You would just get the authorization from the FPPI, and then you would self-file is basically what happens, and we'll look at self-filing in a moment. I know that's a little bit convoluted, but I just want to highlight the fact that all three parties have responsibilities in a routed transaction, and the extent of responsibilities can vary depending on the type of transaction. Because in a non-routed transaction, again, this is any transaction that's not defined in the regs, the USPPI has the responsibility of authorizing the agent or self-filing, providing the agent with accurate and timely information, adhering to all requirements in 30.6, as well as record keeping. The FPPI has no explicit responsibilities in a non-routed transaction. All the responsibilities fall to either the USPPI or the authorized agent. And the agent here is responsible for having the authorization from the USPPI, in this case, because it's non-routed, the authorization comes from the USPPI. They must file the EEI, and they have to provide evidence of filing to the USPPI insofar as confirming back all of the information that was filed on the EEI. They do not have to give you the AES record that comes out of the AESDirect system when you file the EEI. They don't have to print out that page and give you that full confirmation, but they have the obligation of confirming the ITN number and all the factors that were filed on behalf of that USPPI. And then record keeping as well here. When we talk about the information being filed, we're looking at it in three different categories. They are the mandatory, the conditional, and the optional. Mandatory data has to be filed in all cases. We're talking about who's sending it, where it's going, how and when it's going to leave, and what it is. The conditional data elements apply as the case may be. If it is the case, then it must be filed. This includes things like other parties, export control information, and special exports parameters, things like foreign trade zones, diamonds, and vehicles. And then optional would be as the principal parties and interest may require, whether it's the FPPI or the USPPI, seal numbers and equipment numbers going in. The difference, the distinction in data elements for routed and non-routed. For a routed shipment, where the FPPI is responsible for authorizing the agent to file, the USPPI is responsible for providing these 12 data elements on the left. I'm not going to go through all these. I'm not going to highlight. On the non-routed side, there are 48 specific data elements that are identified in the regulations. The ones in blue are the ones that correlate with the 12 on the left. This is really just to illustrate some of the differences in what sort of responsibilities we're talking about and what you have to be aware of when you have a non-routed transaction versus a routed transaction. I'm not advocating for which one is correct in any particular situation. It's going to vary on a transaction by transaction basis, but it's important to understand what your responsibilities are and what you're taking on. So the key takeaways from that section, knowing who authorized the agent. This is the most critical element in adhering to the regulatory definition of a routed versus a non-routed transaction. And you can, so that you know who has which responsibility and you can hold those people to those standards. And also you want to match your actions to fit your intention. The regulations don't care what your intentions were, they care about what you did. So if you want to have a non-routed transaction, then you make sure that you are the one authorizing the agent. If you want to have a routed transaction, make sure that you are having the FPPI authorize the agent. And those things are conforming to what your intentions were. Notably, the US government does not recognize Incoterms as any sort of related concept when it comes to EEI filing or whose responsibility is what. The Incoterms are part of the International Chamber of Commerce, has no relationship to the US government or our regulations. Here are some references that you can use to kind of build out and research how to approach your process for EEIs. And we can kind of hopefully the next few slides will help give us a better insight, but these are some places to start. I will note that much of the census information on their website is outdated by a good margin. There's been several updates in ACE and the AES system that make their guidance less helpful than it should be. But as always, if you get stuck, feel free to reach out to us. Self-filing EEIs in the AES. Okay. This is a question that I see people asking me often, when should I be self-filing? Here's my answer in a broad, simplistic way. Only self-file the EEI when an EEI is required, when you are the USPPI, when it is a non-routed transaction, and when you prefer not to use an authorized agent. Those are the four criteria that you would want to meet if you're going to file the EEI yourself as a USPPI. If you have a shipment that is exempt from filing, then do not file the EEI. If you are not the USPPI, do not file the EEI. If it is a routed transaction, do not file the EEI unless you've been authorized by the FPPI to act as an agent. I'm not going to get into that. But if it's a routed transaction, you probably should not self-file the EEI. And if you would prefer to use an authorized agent, do not file the EEI. You don't want to have two records on the books. So, and this kind of compares to when should I not use an authorized agent? That's another way to look at this question. Effectively, as a USPPI, you're deciding between self-filing or using an agent for your non-routed transactions. Self-filing is for companies and businesses that want to exert the highest degree of control over their regulatory environment, their responsibilities, maintain their compliance. I generally don't recommend that companies do self-filing VEIs. It's generally not worth maintaining the degree of responsibility and all of the just awareness of all the moving parts. And also, typically as the USPPI, you're not involved in the transaction in a way that's particularly suited for being the filer. Typically, the filer is going to be one of the last parties in the transaction to have information pertaining to the shipment of the goods, and you want that party to be the one filing the EEI so that you don't have a lot of telephone going on. But if you are thinking about self-filing EEIs, I would say you want to have an already established compliance department that can absorb these additional responsibilities, and that you have a specific reason to exert that control over this EEI filing process. Whether you've been burned in the past, whether you're suspicious or suspect that your buyers might be providing incorrect information, you want to maintain full visibility on all of that interaction, whatever the degree may be, but have a reason to be a self-filer. Don't just do it because you feel like it. It's generally not cost effective to be the filer. And also, self-filing requires you to be in direct communication with transportation partners to obtain critical facts about the shipment in order to complete the EEI. And you cannot complete the EEI, you cannot submit the EEI until you have a completed EEI. So how do you self-file if you were to go this route? And this will give us some insight into what's actually involved in the filing process. So there's a little bit of benefit there too. To be a self-filer, you must have an EIN, an employer identification number or a tax ID number registered with the US government. And you must also have an ACE exporter account. You can apply for an ACE exporter account online. I will caution everyone that tries to do this. This is not like opening an account at Microsoft and typing in your name, or opening an account at any other website in the known world. ACE accounts are notoriously challenging to get established and to maintain. They're just notoriously difficult. Don't step into this lightly. This is something you want to do on purpose. You have a reason, and this is why you're going this direction, and you're going to commit to making it happen, because it can take weeks to get your account authorized or more. So the info that is required for filing is broken into 4 parts. When you go into the filing screens, and I'm going to show you screenshots of the screens. I'm going to kind of breeze through them just because of time, but they will be on the slides that you will get after the session. The information is broken into 4 categories: shipment, parties, commodities, and transportation. All of these data associated with each of these that needs to be input before the EEI can be filed. Okay, here's just a quick screenshot of the AESDirect system. The first step 1 shipment, where you would provide information on in this case, just the facts about the shipment, mode of transport, ports of export and loading. One thing I will note here is that the departure date is the date of export, not the date of shipment. A lot of US PPIs will think that the date it leaves their facility is the date of export. It almost never is, unless you live close to the border and it's going by truck or rail. And the departure date is the date it's being exported. So you have to know that information before you can even get past this stage of the EEI filing. You cannot progress. You can save your progress, but you cannot progress. This is the other one here is the origin state, which is not to be confused with the state of export. This is kind of a converse of the date of departure. The origin state is where the goods begin their journey for export. So if they're manufactured in Illinois to be exported from Georgia, 3 or 4 weeks down the road, but they're not being used in Georgia, they're just kind of sitting in a warehouse until it's time for export, then the origin state is Illinois here. But if they go to another state to be further manufactured and then get repackaged and sent out or parceled out for shipment, then the origin state would be wherever that location is. Step 2 are the parties to the transaction. A screenshot here is for US PPI, but also there are 4 parties that are identified on the same screen lower down that you can't get to from my static slides. The US PPI ultimate consignee that we talked about before. This is the party who is receiving the goods. The intermediate consignee, which is a party that is using the goods in between before they go to the ultimate consignee. And then the freight forwarder. Both the intermediate consignee and the freight forwarder are considered conditional or optional data elements depending on the circumstances of the shipment. You can proceed to the next screens without inputting that information, but you should be putting that information in if it is relevant to the shipment. So there's a little bit of gotcha there. Notably not listed on the parties to the shipment is the FPPI. There is no FPPI criteria. And all the information you need to provide is very similar to what you see on the screen here. The third step are the commodities. This is where you input your export information code. Usually it's considered other goods. I believe the code for that is OS, but there are several other categories of goods that are pertinent that you may need to review. Then your Schedule B or HTS number, your description of the goods, which needs to be sufficient to identify the goods. And then your quantities, and so on and so forth. If you have a licensable shipment, depending on what you select in that license type code box, you may need to provide additional information pertaining to the ECCN or to the ITAR or other agency licenses that may apply to this shipment, including the values or the amounts that are being deprecated from the license that might exist. And the fourth step here are the transportation facts. And this is one of the key reasons why many USPPIs should not be the ones filing, is because they don't know this information. In fact, this information may not exist until hours before the goods cross the border. It just depends on what relationship is set up, but and what sort of staff you have to maintain this information. If it's crossing the border at 2 a.m., if it's going by truck usually when that happens, and you don't find out about it until 11 p.m., who do you have people on staff that are going to be able to get the information they need, complete the EEI, and get it turned back around to the trucking company so that they can get their goods across? So that information typically is not known sufficiently in advance. I guess you wouldn't really need it for the trucking, though. Neither here nor there. Transportation information goes there. I'm getting so tight on time and I see all the questions, so I'm going as fast as I can. The last step is a submission of the information. You are likely to result in either warnings, fatal errors, or rejections of your filing. If you do not have any of those and your filing is accepted, you will get an ITN, an internal transaction number. That number is conveyed to the carrier so that they can cross the border or begin their export. There is information on how to navigate that. Agent filing, I'm going to go fast. When should the agent file? The agent should file when an EEI is required, and framing here, it's a non-routed transaction. The USPPI has authorized the agent, or in a routed transaction, the EEI is required and the FPPI has authorized the agent. Those are the two circumstances in which the agent should file. Either it's a non-routed and they've been authorized by the USPPI, or it's a routed and it's been authorized by the FPPI. Agent filing is far and away the most common method for filing, specifically because they are the last one to have relevant information on the movement of the cargo, and that movement of the cargo is relevant and required for the EEI filing. You can have an uninvolved third party be an authorized agent, but that has all the same kind of trappings as a self-filing where the information is not readily available to that third party, so it's not often recommended. But if you've got a specific use case or you want to have specific observation over the filing activity, then you would possibly use a third party. Typically for agent filing, the most common way that they get the information they need is through the shipper's letter of instruction, the SLI. This is a very common document, but it takes many forms. The SLIs were adopted by the forwarding industry after we transitioned to AES and the EEI filing from the legacy SED, the Shipper's Export Declaration, that was in place in the early 2000s and prior. They basically got rid of the SED universe and replaced it with the EEI and got rid of all the forms that were associated with that. So the forwarding industry made their own forms. There is a non-standardized, this is not a regulatory form. You are not obligated to complete this information, although you are obligated to the information that you provide. If you provide it, it must be true and correct. And you must provide information to the filer to some degree, whether or not it's this entire form or just pieces of it. But when you complete this information, this is a non-standardized version that the NCBFAA puts out as a model on their website. And you should only be completing what you know, and you definitely should be saving a copy of what you provide for your own record-keeping purposes. If you have to amend the form after you've already provided it, save both copies. Have that chain of events there. If you are not the USPPI, you should not be completing this form. This is a form for USPPIs to complete. So if you're not the USPPI, don't complete SLIs. If you're not sure if you're the USPPI, we need to go back to the definitions and make sure that we've kind of covered that regulatory basis of whether or not you're the primary beneficiary for the export transaction. And one key part of the agent of the SLI forms are the agent authorizations, which states, check here if the USPPI authorizes the above named forwarder to act as its true and lawful agent for the purposes of filing the EEI in accordance with laws and regulations. It does not authorize the forwarder to determine license authority or obtain licenses under EAR or any other licensing agency. This box, super important. If you are the USPPI in a routed transaction, you would not check this box, because in a routed transaction, the FPPI is the one that authorizes the agent. This box is a box of authorization. So as the US PPI, you would not check this box for routed transactions. There are many different versions of SLI documents. Many of the larger forwarders have their own standardized form that they can import into their systems and yada, yada. They will all look a little bit different. I will provide a link to the NCBFAA model with the materials along with this webinar, so you can kind of see what these look like. But they do take many different forms, and you want to be on the lookout for this language, however it appears, because you only want to be checking that box in specific circumstances when it's right for you to do so. If you have a standing relationship with a forwarder that acts as your agent, then this box should not be required on each shipment. So there's different ways that you can stand that up. So do not check that box unless this is a non-routed transaction and you are the US PPI. I'm breezing through here, I'm sorry. Audit and oversight is extremely important. ACE provides reports. ACE is the system where the AES lives. AES is where you file the EEI. So in the automated commercial environment, you can pull reports that is what the government has on your EIN as export activity, as well as import activity if you're also using ACE for imports. You can use the ACE reports to verify the filing activity that's being registered under your EIN. I've seen several circumstances where there is export activity under one of my clients' EINs where they have no knowledge of that shipment. They weren't part of that transaction, but the forwarder either made a mistake or was doing so maliciously. And that was disclosed to the forwarder and the corrections were made and yada, yada. You can use the ACE report to verify your data accuracy and timeliness for your own internal integrity of what information you're providing to the forwarder, whether that, or to the filer, whether that information that you have provided is what was actually reported in the system, whether they filed it on a timely basis, whether you're providing it timely. You can measure and report on your export activity so that you can see through the lens of the US government what sort of export activity you're responsible for and where your scope of responsibility lies. And you can have semi-automated delivery of ACE reports to your ACE account, and you can pull those on a monthly basis or whatnot. Auditing and reporting is a key part of compliance. It's often overlooked. It's very easy to overlook, particularly with smaller exporters that don't understand that their forwarder is filing this information on their behalf. So errors can easily go undetected for years without active use, monitoring, and interpretation of these reports. And if you're a little bit more advanced using your reports already, a hot tip for you, look for data that's not in the report that should be. That's one of the areas where most even experienced professionals will kind of analyze their reports and see their statistics and kind of use it for their internal reporting, upstream metrics and yada, yada. But they don't pay attention to what's not in there. And there could be a whole swath of shipments that you sent out that never got reported. And that's probably some version of smuggling or something similar to that, where you have exported goods and not properly declared them. And there's a penalty for that, particularly if it is not disclosed. So keep that in mind. Here are some additional references and resources for your use. We won't talk about those. And here is your NCBFAA code that you can use to get your credit. But I want to say thank you to everyone that was on today's webinar. There are some great questions in here, and I will attempt to email people that have submitted questions after the fact, as long as I have your name. If I don't have your name or I didn't get to your question, please feel free to send us an email, and I would be happy to take a look at it and try and provide more context. I know it can get convoluted. I know there's a lot of information, and I appreciate everyone's patience today. Thank you very much. Have a good day.